Hello, everyone, and welcome to another episode of Malone Bailey's official podcast, Everybody Counts. Thanks so much for tuning in. My name is Matt Setzicorn. I'm the administrative assistant here at Malone Bailey and the host of our podcast. Now, Everybody Counts features various perspectives on a variety of topics, from the latest SEC updates to discussions on recruiting and retention and so much more. Everybody Counts really explores trends and hot topics that affect us and everyone in our business. Now, today's conversation is a topic that I feel is quite interesting, and a lot of people in the accounting realm, even clients, could learn a lot from. And recently, Malone Bailey started offering valuation services when we brought Jamie. So everyone, please join me in welcoming Jamie.
Thank you for having me.
Yeah, of course. Now, for starters, why don't you tell us a little bit about your background, how long you've been working in your field, where did you go to school, how long you worked here, et cetera, et cetera.
Sure. Well, I started my career in audit, believe it or not. I have an undergraduate degree in accounting. And then after working in audit for a few years in a Big Four firm, I went back and got my MBA and focused more on finance. And from there, I started my valuation career. And believe it or not, that was about 25 years ago. So
Okay.
I've been doing valuation for a little bit.
Yeah, a hot minute.
Yeah.
Well, awesome. We're so happy to have you here. Let's just jump right into it. Can you just provide an overview of Malone Bailey's valuation services and how they really support businesses in today's competitive landscape?
Sure. I like to think of it, our services in three buckets. We provide valuations for financial reporting. We provide valuations for tax reporting. And then there's this other category, which can be planning, some estate planning, as well as litigation.
Okay, awesome. So since you have so much prior experience at other companies, what do you think sets Malone Bailey's valuation approach apart from other firms in the industry, in your opinion?
I think the experience at Malone Bailey is different because we have a large public client base. And with that, we see a lot of different valuations, because part of what we do is not just do valuations for external clients, meaning non-audit clients. We also perform reviews of audit clients. So because we have a large audit base that are public, we see a lot of different types of valuations, and we can use that in our experience as we serve our non-audit clients as well.
Okay, awesome. So could you elaborate on the importance of unbiased, supportable, and transparent valuation opinions in the current regulatory environment?
Sure. So for starters, when you go into evaluation, especially a financial reporting valuation, you know your work is going to be reviewed by either a third-party auditor or reviewed by their valuation specialist or even the PCAOB. So what you have to do is build a case all along, because valuation is not just a black box where you throw numbers in and it spits out a number.
Right.
There's a lot of judgment that goes into it. So all along the way, from developing what valuation approach we use to the assumptions we use, has to be supportable. And it has to be consistently applied. So from the very beginning to the end, we think about how we're going to support this valuation, and we build that case all along.
Okay, so can you walk us through the process of conducting evaluation for different types of businesses? Are they any different depending on company size or anything like that?
Well, that's a good question, but the process is mostly the same with a small company versus a large company, but the types of information that you get might be different, and a little bit more supported. So a small company probably is not going to have a full accounting staff or a finance staff. So they may not be used to providing projections, and a lot of valuation is forward-looking. So we look at projections and cash flows. And so if a small company or a startup company doesn't have that, then we might have to change our approach. So that we always start with, an information request. We get the documents. We have a conversation with management over the type of documents they have available, the validity of the documents, and then we decide on our approach from there. And then looking at our approach, then we may have another conversation and do our own research for market comparables. And then we develop our models and present our report.
Okay, there's a whole process there.
Yeah.
So, what specific challenges do you encounter when valuing intangible assets, and how do you really address those challenges when they arise?
Well, a lot of intangible assets, you're kind of limited in the approach because not many intangible assets have a public market.
Mhm.
So pretty much the market approach 90% of the time is not a method
Mhm.
that we would use, but we would use market data in an income approach.
Okay.
But still, like I said, valuations are forward looking. So you would have to come up with some type of forecast of what revenues might be associated with that intangible asset, say a patent, for example. So it would have to be tied to some product. So there's a lot of back and forth on what that patent, what the value, the revenues might be, and then how you would go about valuing that. So it's a little bit harder in that the approach can be limited.
Okay. Now, we just got done with the tax season, so I'm really curious, in what ways do valuation services assist clients in tax reporting?
So the main two ways we assist in tax reporting are in estate planning. So this would be where an individual would gift part of a company. Let's say you're a family business and that you own a company and you want to think about generation transfer, wealth transfer to your next generation or thereafter. So they would give shares to a trust, and then we would have to value those shares, and a lot of times it's minority interest, and so the IRS has requirements for what a supportable valuation is, and so and what type of report you have to prepare, and so we have to do a pretty long, lengthy report on that. So that's number one, is for tax planning for generation wealth, and then the second one is if you have a large company, and sometimes they have a different, maybe an international organization. Maybe they want to restructure for tax purposes. If you've got losses in one, country and gains in another, and there's some tax benefits to restructure, then that would be like a taxable transaction. And so we would have to value individual reporting units or segments in that. So those are the two primary ways we support tax valuations.
Okay. So could you share some insights into how you support clients in litigation through your valuation services?
Sure. So first of all, just to be clear, anytime we support in a litigation, it's not an audit client. So those would be primarily audit clients. I mean, primary clients that are not audit related.
Okay.
I can give you one example recently where I was hired to do a valuation for a minority interest owner. After many years of disputes and lawsuits and counter lawsuits, the minority owner decided that the best way out was just to sell his minority interest. Well, there was a dispute over what the value of that minority interest was.
Right.
So they hired me to do an expert opinion on what that is, and then that's presented to the court to say this is my expert says this is what it's worth. Of course, the other side will present their expert.
Right.
And then sometimes a third expert gets hired, but the next steps in that case might be a deposition or testimony and support what that valuation the company is worth. So a lot of times it's supporting a client that wants out or they've been damaged in some way, and the solution is what the value is for.
Gotcha. Okay. So my next question really is, every single industry is changing at lightning speed right now. It's a very daunting task to stay up to date on everything happening around in every industry, and especially the auditing industry. So how do you stay updated on evolving regulations and industry trends to ensure its valuation methodologies really remain relevant and effective?
That's a good question. Well, the main ways I stay up to date is being involved in the industry. And the way that I do that is I'm on an executive committee for the AICPA's financial evaluation, forensic evaluation section. We meet 3 times a year, and then we have our annual conference in Vegas. Actually, it's in Dallas this coming year, but in this past November, it was in Vegas.
Okay.
And there's a good 2-3 days of various topics that you can attend relevant in your area.
Mhm.
And then also the Appraisal Foundation has an appraisal issues task force, which meets 3 times a year also. And those are usually like a Zoom call that you can stay up to date. They have people from FASB, SEC, PCOB speak on current topics that affect valuation. Those are actually really good. And then the other way, obviously, it's very easy here is because we have a large SEC audit base. So we see a lot of different things. And so we're interacting with third-party valuation specialists all the time. If there's a disagreement, we talk about it. So in the same way with our work, if we do financial reporting valuation, our work is always reviewed by another auditor. So in a way, we see other people's opinions, and then so we're constantly being challenged.
Okay.
I think on what the right approach is.
Gotcha.
In certain circumstances.
Okay. Awesome. Yeah, always important to just stay updated.
Exactly. Always. Yeah.
Feels like a marathon race nowadays.
Right.
So now sometimes companies or clients will seek out valuation services without fully understanding what that comes with, or they have their own idea of what will get done. So they might not really have the right documentation, or they'll feel prepared, but in actuality, they're really not prepared whatsoever.
Mhm.
So what are some common misconceptions or challenges that clients face when seeking valuation services, and how do you really address them?
Well, the most common, in my opinion, is like I said, with a smaller company, and it's a challenge because a valuation is dependent on the information you get, and it's very much forward looking. So if a client doesn't have a history of creating like a 5-year business plan or good projections, then it's very hard to rely on that. And so what we have to do is work with them. It requires a lot more time. So people don't want to pay for the time usually,
Right.
or one way to save money is obviously if you do have a good plan. But we look at how good they are at providing that forecast, working with them closely on what are the drivers of the business, and to drive like the right approach and to come up with a good supportable valuation.
Okay. Well, this is my last question for you, Jamie. So what should potential clients really consider when selecting a valuation service provider such as yourself?
Well, I mean, I think it's very important either is experience, whether it's the right industry experience or experience with a specific type of valuation, because they are different and there's subspecialties within valuation. So I think it's important to look for someone with that specific type of experience.
Okay. Well, that's all the questions I have for you now, Jamie. Thank you so much for talking with me today about the world of valuation services and all that comes with it. Your insights really shed a new light on the topic, and I feel like people can hopefully go forward knowing with a better understanding of what valuation service really entails. Now we're going to switch gears a little bit and play a little game that we like to play here on the podcast. It's called This or That. So I'm just going to ask you a couple questions and you'll just choose whichever one you prefer.
Sure.
All right. So the first one is winter or summer?
Summer.
Summer. All right. I'm not a big summer person. It's too hot down here for
Well,
that.
August is pretty bad, but I just came back from the Caymans. That was actually really nice.
Oh, okay. Yeah. That's good weather then.
Yeah.
All right. Well, on that note, next one is vacation or staycation?
Oh, vacation.
Vacation. Yeah. And then last one is hot coffee or iced coffee?
Oh, hot for sure.
Hot. All right. You like the heat, I see.
That's right.
All right. Well, that concludes today's podcast. Thank you again for the helpful information today. And I'm really appreciative of you, Jamie, for taking time out of your super busy schedule to chat with me. I had a great time talking with you. To everyone listening, we really appreciate you listening in, and we invite you to check out our website, www.malonebailey.com, for more information about public company audit services, as well as some of our other useful resources. Thanks again so much for listening.